Good morning, and today is 7th of May. Welcome to your daily market update. The US dollar is under some pressure ahead of the Fed decisions, and there are some interesting moves in the currencies and commodities as well. So let's break it down. So first, the dollar index. The dollar came under renewed selling pressure on Tuesday because investors turned cautious ahead of the Fed's upcoming policy decision. The index dropped to around 99.25, marking its third straight day of losses. And a key factor behind this weakness is the growing uncertainty over US trade policy. While President Trump hinted at a possible reduction in the 145% tariffs on Chinese imports, he also announced a new 100% tariffs on foreign film studios and signaled potential new tariffs in the coming weeks. That mixed messaging has investors staying defensive. All eyes are now on the Fed's rate decision, which is widely expected to result in no change. However, market participants are closely watching Powell's speech amid the rising political pressure from the White House to cut rates. Despite the dollar's general weakness, it has managed to rebound slightly against several Asian currencies, particularly the Taiwanese dollar and Malaysian ringgit. And from a technical perspective, the dollar index is trading around 99.5, and the momentum indicators remain mixed, which RSI sits at 40.5, suggesting a neutral momentum, and while the MACD gives a mild buy signal, and the 20, 100, and 200-day moving average all lean bearish. So support is seen as 99.4 with additional downside level near 99. And on the upside, a break above 100 psychological barrier could lead to a test of 100.3. So moving on to the WTI oil, the oil prices rebounded sharply on Tuesday, rising more than 3% to around 58.7 per barrel. This bounce came after 2 days of losses and was driven by renewed geopolitical tensions. Israel launched airstrikes in Yemen after Houthi rebels fired a missile at its main airport, raising concerns about potential disruptions in that region. And at the same time, there's ongoing pressure from the supply side. OPEC has decided to ramp up production again, and Saudi Arabia has signaled it may go further if other members don't comply with the output targets. And US shale output has also remained high, adding to the supply glut. Oil is still trading near a 4 year low, with support around 57 and a stronger resistance near 59.64 and $60. So next we talk about gold. Gold surged more than 2.9% on Tuesday, which briefly touching a 2 week high of 34.35 per ounce before settling slightly lower around 34.30. The safe haven metal benefit from nervousness over the trade policy and global uncertainty, especially as President Trump introduced more tariff threats ahead of the Fed meeting. And from a price level standpoint, gold is currently holding about 3,400 with key resistance around 3,450. And support lies at 3,371 and further down at 3,300 if the price starts to pull back. Now turning to the Australian dollar. It is pulled back slightly after touching a 5 month high of 0.65 earlier this week. It is now trading around 0.45 as the US dollar sees a mild recovery ahead of the Fed decision. But still, the Aussie remains fairly supported. Prime Minister Anthony Albanese's re-election over the weekend brought some political clarity, and China's recent tariff exemptions on the US goods have helped to improve the risk sentiment. And looking ahead, NAB now sees Australian dollar reaching zero point 0.7 by year end, driven by the continued weakness in the US dollar. And for now, the key levels to watch are the support at 0.64 and the resistance at 0.6528. So that wraps up today's update. With the Fed's decision ahead, keep an eye on how the dollar and commodities react. Thanks for tuning in and best of luck with your trades today.